the trend is upward. And I have said before, I'm on the record having said that I think the chances are good that we would see new all-time highs this year. And I have a couple months, I got a couple months left to be right or wrong. And I don't want to be right because of the war. That would be a sad reason to be right, but it could be. Looking at it, looking at the recession, it's here on a global level, and I think it's here in disguise in the U.S., but I think the disguise falls. We've talked about that. I only have a couple months left to be right on my call about recession by the end of this year. But even if I'm wrong and it slides into the next quarter, I still think it's coming. I think the recession denial goes away, and I think that's very, very bullish for gold.
According to WisdomTree's assessment, in the bullish scenario, the Fed will react to warning signs of economic recession and begin to loosen monetary policy in 2024. And if a recession materializes, WisdomTree expects inflation to fall to its target level. In this scenario, gold could reach $2,300 an ounce in 2024, 12% higher than the all-time high reached in August 8th. Lobo Tiggre is the founder and CEO of Louis James LLC and the principal analyst and editor of IndependentSpeculator.com. In this video, Lobo Tiggre conveys a positive outlook for gold while anticipating record highs by the end of this year. Gold has been trending bullish, and it's currently forming a bullish pattern. This pattern suggests that gold could continue its upward trajectory, potentially reaching new highs in the coming months. Lobo Tiggre sees gold as a tangible, long-term savings asset and underscores central bank gold buying plays a key role in the ongoing dollarization trend. Central banks globally have bought a record 800 metric tons of gold in the first 9 months of 2023, up 14% from the same period last year. This surge in purchases is part of efforts by countries to hedge against inflation and diversify their reserves to reduce their exposure to the US dollar. Meanwhile, Lobo Darth Silver Thesis notes silver's mixed role, trading more like copper than gold, despite his affinity for silver. Silver has fallen during the trading session on Tuesday, reaching toward the bottom of the overall consolidation that the market has been in. Ultimately, precious metals in general got hit during the day, as the US dollar strengthened quite a bit. Now we present the clips of Lobo Tiggre's insights from his recent interview with Investing News. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The trend is upward, and I have said before, I'm on the record having said that I think the chances are good that we would see new all-time highs this year. And I have a couple months, I got a couple months left to be right or wrong. And I don't want to be right because of the war. That would be a sad reason to be right, but it could be. But hopefully that doesn't happen. I would rather be wrong than to see more dead bodies over there. I much rather see myself be right because the Fed breaks something. Again, not because I want to see economic harm. I'm not lobbying for that. The Fed breaking something, it's already baked in the cake. It's just a matter of where does the shoe drop, and we'll see. And that's actually an important distinction. This, again, is not new. This is something my mentor, Doug Casey, taught me from the beginning. To my way of thinking, gold is not a speculation at all. I don't buy gold because I think the gold-dollar exchange ratio will go up or down or whatever. I buy gold because it's gold. I can hold it in my hand. It has value. If I need it in case of emergency or opportunity, it's there. It's physical wealth in my direct control. It has nothing to do with where the dollar's going or the Fed or the markets or anything like that. It is what it is. As a speculator, though, if I do think the gold-dollar exchange ratio is likely to go up or down, you could go long or short, then the stocks are the way to make money on those movements. I don't trade gold at all. It's my way of saving. It is literally how I've saved for the long term. I don't buy 30-year bonds or none of that nonsense. I save in gold. Like right now, we just had new figures from the World Gold Council, record buying level but you know about it afterwards. And even if we have a record year, that doesn't tell you that this month that they're going to be buying, right? They can take a breather, or they can even sell some because they have, like Turkey or some of these other countries that have been overall over the years amassing. Suddenly they need some money. That's what savings are for. I'm persuaded, actually, that the central bank gold buying driver, it's long-term. It's part of the long-term de-dollarization trend, which, with all due respect to our friend Brent Johnson, that's a real thing long-term. But it doesn't tell us what's happening now. I understand silver is the word for money in many languages, but just look at it. It often trades more like copper than gold over the last year. You'll see that, in the intraday charts. You'll see days where gold goes up and copper and silver go down. Or you'll see days where gold goes down and copper and silver and oil will go up, right? It's acting like an industrial metal. And it does have that industrial use, which is, in some ways, it's great. It's on top of the monetary story. You have this increasing industrial demand. It's an energy metal. You need it for the solar panels. That if you're looking at industrial metals headwinds, if you're looking at a recession, then that tailwind for silver turns into a headwind. And you can't ignore that just because silver is money. So that's been my Darth Silver thesis. And the new news, we're getting it here, in New Orleans, is that we really saw silver come out strong as a safe haven, as a monetary metal. It reacted strongly to the war news like gold, not like copper. So we've seen in recent weeks a strong reminder that the world does still see silver in this other way, not just as an industrial metal. So it was an open question. Is silver just becoming an industrial metal now? And the latest market action is saying, no, we're not there yet. Silver is still being treated by not just those evil Darth types of the world, but even comics traders are willing to move the price of silver based on monetary phenomenon, safe haven phenomenon, not just industrial demand. So that's great. That's good to see. It makes me much more optimistic about silver tracking gold in the recession ahead. But I still, call me Darth all you like, but I still think it will probably underperform. If the main reason that gold is going up in 2024 is the recession, at the very least, it takes away that tailwind that silver had.
During the interview, Lobo Tiggre diverges from mainstream Fed views, claiming the institution is creating uncertainties about the trigger for financial disruption. The U.S. Central Bank last week held interest rates steady, with Fed Chair Jerome Powell noting that higher market-based interest rates could serve the same inflation-taming end as increases in the central bank's policy rate, as long as they are sustained and are not premised on further central bank action. Furthermore, he pointed out that the dollar's strength is only relative to other currencies, emphasizing that it doesn't indicate a real increase in value. The dollar rose 0.1% after hitting a 6-week low in the previous session, making gold more expensive for other currency holders. At the moment, it's really still a story about geopolitical risk, and the margins of risks would seem to have diminished a little bit in gold, and prices are reflecting that, said Kyle Rada, financial market analyst at Capital.com. Let's get back to the interview.
It's funny, if you have more mainstream types like, say, Jeff Gundlach, the bond king, talking about how the Fed is going to start cutting in 2024. And if you look at the market odds, the market thinks the Fed will be cutting by mid-2024. But the thesis behind that version of the rate cut is, the Fed's won. Inflation is tamed, and now we don't need these high rates. Higher for longer doesn't have to be so long because soft landing, right? That's not my thesis. My thesis is the Fed is breaking something now. We're just waiting to find out what it is, right? Is it commercial real estate? Is the student loan repayments that blows things up, or what? We don't know. But in hindsight, it'll be obvious, I think. And so that's my thesis. It's not the mainstream thesis of happy ending. It's something blows up, and then we have to for financial stability. But my question, though, and this matters for gold bugs, is who's going to pivot first? Because the Fed paused, ECB paused, the BOE paused again. The Western central banks, they seem to be all following the same thing. And it matters because Germany just reported negative growth. The EU as a whole, the recession there is becoming harder to ignore. And so if they pivot first, then that's bearish the euro and bullish the dollar. The dollar wrecking ball comes back, right? And that's bearish for gold again. Whereas if there's a surprise in the United States and suddenly the Fed slams on the brakes and does a U-turn, well, then that's bearish for the dollar, bullish for the euro and gold and other alternatives to the dollar. I don't know how it's going to go, and I wouldn't believe anybody who said they will. But all of these things are in play right now. Not strengthen the U.S., strengthen the dollar. And an important caveat there is, we call this the strong dollar, but it's only strong compared to the other currencies. It's not like the dollar is actually becoming more valuable. It's just losing the race to the bottom, right? So I don't want to say transitory, but I do think they're can be a brief period where it seems like the dollar wrecking ball's back, dollar's fine, and I think that creates a buying opportunity. I know people don't want a buying opportunity. They just want gold to go to the moon already, but we don't get to tell Mr. Market what to do. So I'm just calling it like I see it. I do think, in the same way I said last summer, that there's, I made a bearish call. I'm not quite making a bearish call here because the war, for instance, could keep gold elevated in spite of all this. And I don't know that the ECB will necessarily pivot first. My suspicion is that unless something obvious breaks soon here in the U.S., probably the ECB will pivot first. Not a prediction, I don't know, but my gut is sort of inclined in that direction. So it matters in the near term. But going into 2024, doesn't matter. Global recession, including the United States, very bullish for gold and the gold stock.
Gold gained 6.8% in October, reversing an early month slump to finish at $1,997 per ounce, the highest ever monthly close for the LBMA PM price. Safe haven flows driven by geopolitical tensions, partly captured by strong inflows into COMEX futures, were likely behind the move. How do you perceive the evolving market of precious metals in the face of central bank gold buying? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.